Hi. As you know that there are 5 heads of income, correct? So under the income tax, there is a second head of income, that is income to be taxed under the house property. So today we will be discussing the same. The section 22 to 27 talks about or deal with the income to be taxed under the HP. First section is at section 22, that is a chargeability section. What this section says that the chargeability section under the HP says that the annual value of the building or the land attached thereto, of which assessee is the owner, not occupying the building for his own business or profession. Correct. The most important word under the chargeability section, that is under section 22, is about the annual value. What is to be taxed under the HP is the annual value. Now what is mean by the annual value? Yes, section 23 deals with the calculation of annual value, but there is a misunderstanding that the rental income is to be considered as a taxable under the HP. No, the rental income is not taxable. What is to be taxed? The annual value of the house property is to be taxed. No doubt in the calculation of the annual value, one of the factor is your actual rent, correct? But that is need to be compared with the other, and then you will get a annual value, correct? So the rental is not equivalent with the annual value. Rent received is one of the factor to determine the gross annual value, and under the HP the gross annual value is taxable. Second, section 22 put down further 3 conditions to tax under the HP. What are these conditions? The first condition, there must be a building or land attached to the building, correct? Second, assessee must be the owner, and the third one, assessee is not occupying the building for his own business or profession. If we satisfy all the 3 conditions together, then only the income of that house property is to be taxable under the HP. So what is the first condition? We'll discuss in detail. What is the first condition? There must be a building. What is mean by the building? Correct. And whether they are commercial or residential. Correct. Actually, house property means we get a click in and it is a residential. But actually it is not that way. All the types of building, whether it is a residential or the commercial, come under the definition of house property, because the building comes the residential as well as in a commercial. Second, what is mean by the building? It should be complete in a structure. What is mean by complete in structure? If there is a residential building, then there should be a 4 wall and a roof. Then only it can be called as in a completed structure. But for the commercial properties or the commercial building, the 4 walls are sufficient to call the building as in a complete. For an example, there is in a cricket stadiums, correct? The cricket stadium don't have a roof, correct? If they had given a cricket stadium on a rent, but that is to be taxable under the HP? Yes, because that come under the definition of a building. For the commercial building, the roof is not necessary. Only the 4 wall is sufficient. Okay, so that the way the cricket stadium is to be taxed, the rental income of the cricket stadium is to be taxable under the HP. The next, the land attached with the building. I would give an example for this. There is a large open lawn attached to the marriage hall, correct? So the rental income of that lawn is to be taxed under the HP, because it is a land attached to the building. Whereas there is an independent land only. For an example, there is only open lawn, there is no marriage hall to attach to it. The rental income of such lawn is not to be taxed under the HP, because it does not satisfy the first condition itself. So what is in the first condition? There must be a building, or any land which is attached to the building is also to be taxed under the HP. Income from such building is to be taxed under the HP. Second, you must be the owner, assessee must be the owner, correct? If he is not the owner of the building, correct, then the income from that or the annual value won't be taxable in your hand. What is mean by the owner? It is a registered owner. Stamp duty valuation, for the stamp duty valuation, you take it out the register value, register owner, the same concept is over here. But there are 6 exceptional cases where the registered owner would be the different and the deemed owner would be the different, or the deemed owner means owner for the purpose of income tax would be different. That 6 cases had been given under section 27 that I would be discussing at the last. Next, for an example, there is a residential house property. A had given a rent to the B, and the further B had letted out that property to the C. In this scenario, A is also receiving a rent and the B is also receiving a rent. Okay, from that building. So now the question is, under which head it would be taxable? The first, whether it would be taxable under the HP or not. So first there must be a building. Yes, I will discuss first for the A. Yes, there is a building. Second, he must be the owner. Yes, A is the owner. Whether A is using for his own business? No, he had given it to the B and the tenant is using it. Correct? So the income would be taxable under the HP as all the 3 conditions has been satisfied in the case of A. Now I'll go for the B. In the case of a B, there is a building. Yes, but whether the B is the owner? No. Who is the owner? A is the owner. So the rental income received by the B won't be taxable under the HP as he is not satisfying the second chargeability condition. Have you clear? Because the subletting of income won't be taxable under the HP. It would be taxable under the PGBP or the IOS. Next, the third important condition. It should not be owner not occupying the building for his business purpose. Means in that building, if the owner is carrying out his own business, then the annual value of the such building should not be taxable under the HP. Please do remember, owner should carry on his own business. Then it is not to be taxed under the HP. If owner has given to the tenant and the tenant is carrying out his business, then what? Then it should be taxable under the HP because the owner is not carrying out his own business. The tenant is carrying out a business. Have you clear? So if the tenant is carrying out a business, then the rental income from such property should be taxable under the HP only. Next, there could be let out for the smooth running of business. What is this terminology exactly? The smooth running of business. I would give an example. You must have been seen that there is in a banks. I'd been work for the L&T. The L&T premises, the Powai premises itself have a branch. I say a branch office was there in the premises of the company. The company had lettered out his property to the bank. Now the rental income, the company is receiving rental income out of it. So now the question arises whether that would be taxable under the HP or not. So first there must be a building, correct chargeability condition. First there must be a building. Second, the assessee should be the owner. The company should be the owner. Yes, the company is the owner. The third, he should not use for his own business. Actually, the L&T is not carrying out any own business in that premises, the bank premises. The bank is carrying their business, means the tenant is carrying out the business. Actually looking out, the income should be taxable under the HP because the owner is not carrying out his own business. But why the L&T had given that place on a rent to the bank? For his smooth business functions? Yes, the employee should be able to get access of the bank easily. Correct? So employee won't waste the time. Secondly, all the company's operation will be through that branch only. So it would reduce the waste of time traveling to the bank, standing in a queue. Everything could be avoided. That's the reason the company had given, the L&T had given on a rent that premises to the bank. So it is for the smooth running of the business. I do understand there is no direct nexus. But there is an indirect nexus. So such income is not to be taxed under the HP. It is to be taxed under the PGBP because it is for the smooth running of the business. Second, very common, the quarters. Many of the government companies, as Tata's gives a quarter, Godrej gives a quarters to the employee. They do charge a rent to the employee. So they are receiving the rent. Whether their rental income is to be taxed under the HP? The first, there must be a building. Section 22 say, yes, there is a residential house. Second, the company should be owner. Yes, Tata Motors, Godrej are the owner of that. Correct. The third, it should be used for the own business. Actually, the residential house is not used directly for the business. But indirect nexus is there. How? Why the quarters had been given to the employee? Because for an example, if tomorrow the company asks me to move to the Mumbai, I am working rightly in a Pune. Correct? They ask me to move in a Delhi. Sorry, Mumbai would be near to me. If they ask me to move to the Delhi, I won't be ready. Because I don't have a house there, or how I will get settled, I would have too many questions. Correct? So the quarters would make a easy, or it make an easy movability of the employees. Correct? So again, that is an indirect nexus with my smooth running of the business. Correct? So the income would be taxed under the PGBP. It is not to be taxed under the HP, because again it is for the smooth running of the business. The next, if there is a partnership firm, and partnership firm using partners building for the business purpose. Correct? And that partner is getting a rental income. Now the question arises whether the income would be taxable under the HP. No. Again, that rental income is to be considered from own business. Correct? Means the partner is carrying out as an own business. So the income cannot be taxed under the HP. So this is all about the section 22 about the chargeability. Have you clear with the chargeability? So basically it put down the three conditions. There must be in a building, you must be the owner, and it should not be used for your business purpose. If you satisfy all the three, then income is to be taxed under the HP. Next, taxability under the HP. There are special cases. Assessee let out property for the promotion of his own business. Own business, not an HP. HP says that, get pass of the HP says that you should satisfy the three conditions. What are the three conditions? First, आपके पास building है? Yes. Second, are you owner? Yes. The third, you are not using for your own business. If you satisfy all the three together, then only the annual value of the such property would be taxed under the HP. So under this case, own business, no, it would be taxed under the PGBP. Second, assess engage of business of letting of the property. His business is a letting out of property. But in that property, he is not carrying out his own business. Correct. So the income is to be taxed under the HP. Next, building held as a stock in trade for the builder. This is a very common problem. Correct. Now, due to the recession, you had seen that slowdown position, not exactly the recession. From the last 2 years, there is an unsold stock held by the builder. Correct. So whether that would be taxable under the HP, आप बोलेंगे उनका income कहाँ है, उनको कहाँ rental आ रहा है. Just 5 minutes before I told you that section 22 don't says that. It never told the rental is a taxable. It always says that the annual value is to be taxable. Correct. So unsold stock would have an annual value. Correct. So their annual value would be taxable. Is it? We should check out the chargeability. Chargeability says there must be a building. Yes, there is a flats is come under the residential or commercial building definition. The second, the should be owner. Yes, the builder is the owner. He is not using for his own business. एखादा जो samples flat है that I can consider as using for own business, but remaining flats is not using for own business. Correct. So I agreed with you 100% that is a stock in trade, but the section says no. It is to be taxed under the HP. But the gross annual value would be considered as a nil for up to the 2 years from the date of the completion. But after that, it is to be taxed under the HP. The annual value would be taxed under the HP. How to compute the annual value? Yes, that is there to discuss. But first of all, yes, up to 2 years from the date of the completion, it is not to be taxed. But after the 2 years from the date of the completion, it is to be taxed under the HP. Are we clear with this? These are some exceptionals. Next, how to compute the income from the HP? That is next point to discuss. So, how to compute the income from the HP? It says that first you do calculate the gross annual value. What is mean by gross annual value? I'll come to the detail of that. That is the first you calculate the gross annual value less municipal taxes paid. Municipal taxes paid by the owner then you will get, if you reduce your GAV from your GAV, if you reduce the municipal taxes, you will get the NAV, that is the net annual value. From the net annual value, you reduce the two things. That is a deduction under section 24A, that is a standard deduction at the rate of 30%. And the second, interest on borrowed capital. The borrowed capital is what is in the purpose of that? That is for the purpose of purchase, construction or repair of that house property. The interest on that is to be reduced, and whatever you will get, that is nothing but income to be taxed under the HP. So what is the income to be taxed under the HP? First you do calculate the gross annual value. Correct? How to? There are 3-step calculation. I will come to that. Less the municipal taxes paid by the owner. After reducing the municipal taxes, what you will get? You will get the net annual value. From the net annual value, you will deduct the two things: standard deduction and interest from the interest for the borrowed capital. Standard deduction at the rate of 30% of the NAV. And interest on borrowed capital. If you reduce it out, the two figures from the NAV, you will get income to be taxed under the HP. No other reduction is possible from the HP. Matlab there isn't any repair you had done, uska deduction milega? Nahi. For that there is a standard deduction of 30%. I won't allow any other expenditure as a deduction except the three. The first is the municipal taxes paid. The second one is standard deduction at the rate of 30%, and the last one is the interest on borrowed capital. Only these three expenses or only these three deduction could be possible from the gross annual value. Correct? No other expenditure would be allowed as a deduction. Insurance taken on property. Correct? Whether the deduction? No deduction could be possible. Any repair done? Correct? No deduction. Have you clear with this? Only this three deduction is possible from the gross annual value to calculate income to be taxed under the HP. So now we'll go in detail. How to calculate the gross annual value? I told you already there are 3-step calculation. The first step in that says that you do compare the municipal value with the fair rent. What is meant by fair rent? You can say the market rent. The municipal value is a value that is a base for the determination of the municipal taxes. Correct? So the municipal value of the fair rent, whichever is higher, that is your step 1 answer. That step 1 answer you need to compare with the standard rent, whichever is lower. What is mean by standard rent? There is a standard rent control act. According to that, for each area the standard rate had been determined. So the step 1 answer is to be compared with the standard rent, and the lower of the two would be taken as a reasonable expected rent. The answer of the step 2 is to be called as a reasonable expected rent. Next, step 3, this reasonable expected rent is now to be compared with the actual rent received or receivable. And whichever is higher is to be considered as a gross annual value. So 3-step calculation. The first step, it says that the municipal value and the fair rent is to be compared, whichever is higher. Correct? The second step, the answer of the first step is to be compared with the standard rent, whichever is lower. Step 3, the step 2 answer is to be called as a reasonable expected rent, and that is to be compared with the actual rent received or receivable, whichever is higher. This is a 3-step calculation for the GAV, that is a gross annual value. Try to understand, even if there is an actual rent 0, correct? Actual rent come into the picture in the 3rd step. Actual rent 0 bhi rahega, but step 1, step 2 answer would be there, and that would be taxable. Matlab nutshell, like the municipal value, nahi to market rent of the property would be taxed under the HP, not the rental income. In the case of the builder also, the same thing would happen. Unsold stock ke liye after the 2 years, their fair rent or the municipal value, whichever is higher, would be taxable under the HP, even they are not receiving the any rent. So this is a notional income is taxed under the HP, not the actual income. Have you clear with this? We'll go for the question. So the question on this part, computation of the reasonable expected rent. Matlab the answer of the step 2. So the first, what has been given? Particular gross municipal value has been given. The second, what has been given? The fair rent has been given. Next one is standard rent has been given. There are 3 things had been given, and they had asked you to calculate the reasonable expected rent. This is just to understand the concept. So what is the step 1? Step 1 says that compare the municipal value. Compare the municipal value with the fair rent, whichever is higher. The step 1 answer would be 10,000, and that is to be compared with the standard rent, whichever is lower. That is a step 2. So your answer reasonable expected rent would be 10,000 in the case of house 1. Next, house 2. Step 1, municipal value is to be compared with the fair rent, whichever is higher. The step 1 answer would be 16,000, and that 16,000 is to be compared with the standard rent. Correct? Step 1 answer is to be compared with the standard rent, whichever is lower. So in this case, the 14,000 would become a reasonable expected rent. Next, in house 3, again we'll compare the municipal value with the fair rent, whichever is higher. So the step 1 answer would become a 16,000, and that 16,000 we do compare with the standard rent. But if the standard rent is not available, they ignore the step 2. Correct? Then the step 2 would directly ignore. The step 1 become a reasonable expected rent. So the 16,000 would become a reasonable expected rent. Higher, lower and higher. Correct? So the house 4, 18,000 is your municipal value, is to be compared with the fair rent of 10,000. So whichever is higher, so it comes to 18,000, and that is to be compared with what? Standard rent, whichever is lower. The standard rent is 8,000. So gross annual value, reasonable expected rent would become a 8,000. It's only the 2-step calculation. Actual rent has not been given. Agar actual rent diya hota, to what we would able to calculate? Would able to calculate the gross annual value. Correct? So we do have only 2 figures, so we can calculate only the reasonable expected rent. Next, house 5, the gross municipal value is 16,000, correct, and the fair rent is 17,000, correct. So I will compare the higher of the 2. The step 1 answer would be higher of the 2, that is 17,000, that is to be compared with the standard rent, whichever is lower. So reasonable expected rent would become a 17,000. So this was actually easy, just to understand the step 1 and step 2. The gross municipal value is to be compared with the fair rent, whichever is higher. The answer of the step 1 is to be compared with the standard rent in the step 2, whichever is lower. You will get the reasonable expected rent. Now, next, come back. Now the next is what we had seen. The fair rent, municipal value and standard rent is to be required an actual rent. Correct? The question could arise was, what if property is let out for the part of the year, and for the part of the year it has been vacant. So I will get actual rent only for the 8 months. For an example, the property is let out only for the 8 months. So I will get the actual rent only for the 8 months. Now the question could arise, what about this municipal value? वो तो annual figure है. Standard rent, fair rent, standard rent. Which figure I take it out? Should I take out on 8 months, or I should take out the annual? Have you got it? If the rent received is only for the part of the year, correct? The question could arise whether the all other 3 things, this municipal value, standard rent and the fair rent, should be taken as an annual, or it should be taken only for the 8 months. So if the property is vacant for a part of the year, correct, or the property is let out for the part of the year, yeah, the property is self-occupied for the part of the year, correct. Matlab you are not let out, you yourself was acquiring it. In all these 3 cases, the municipal value, the fair rent and the standard rent always to be taken as an annual value. You should not take as a par for the part of the year. But when it is to be taken as for the part of the year, if HP is under the construction for the part of the year. मतलब the building got ready in the month of August. On 31st of August only the building got completed. So उसके पहले मतलब April, May, June, July, August, for this 5 months there was no building at all. So in this case all this figure is to be taken for the part of the year. So in this case the municipal value, fair rent, actual rent तो obviously 8 महीने का 7 months का ही आएगा, but all this 3 figure is also to be taken for the 7 months. In my example, as the property got ready on the 31st of August, so it was ready from the 1st September, correct? So in this case the fair rent, municipal value and the standard rate is to be taken for the part of the year. Next, if you are the owner for the part of the year and acquire the property in the month of Jan only, so it be owner only for the 3 months during the previous year. Yeah, in this case the municipal value, fair rent and the standard rate to be taken for the 3 months. Are you clear with this? So there is a question on this part as well. So house 1, house 2, house 3, house 4, there are 6 houses. Period for the previous year had been given. So period for the previous year had been given for all the houses except the house 6. Correct? It is in a 10 months. Correct? For the remaining all, for the remaining all, it is in a 12 months. The gross municipal value for the whole year had been given. Next is a fair rent. Uske baad mein there is a standard rent had been given, and the actual rent receivable is also given. Now what is our step 1? I'll do for 1 or 2 houses, remaining would be the homework. I will take out the house 1 first. What is the step 1? The municipal value is to be compared with the fair rent, whichever is higher. So step 1 answer would be 120. That is to be compared with the standard rent. If the standard rent is not available, ignore the step 2. Your reasonable expected rent would be nothing but the answer of the step 1, that is a 120. And that is to be compared with the actual rent receivable. So whichever is a higher would become your gross annual value. Next, for house 3, the municipal value is 140. The fair rent is 135. Step 1 says that the municipal value is to be compared with the fair rent, whichever is higher. Correct? So how much will become step 1 answer? 140. That is to be compared with what? Standard rent. Correct? Whichever is lower. So the step 2 answer is a 135, and that is nothing but the reasonable expected rent. That is to be compared with the actual rent, whichever is higher. In this case both are same. So your GAV would become a 135. Next, house 5. The municipal value is a 160. The fair rent is a 175. So the step 1 says that whichever is higher. So answer of the step 1 would be 175. That is to be compared with the standard rent, whichever is lower. What is the standard rent? How much? 165. Whichever is lower means it comes to 165. And that is to be compared with the actual rent, whichever is higher. So it comes to 200, become your gross annual value. Higher, lower, and again a higher. The municipal value is to be compared with the fair rent, whichever is a higher. The higher of the step 1 is to be compared with the standard rent, whichever is a lower. The answer of the step 2 is to be called as a reasonable expected rent, and that is to be compared with the actual rent received or receivable, whichever is higher. Okay, are you clear with this? But what is the problem in a house 6? The period for the previous year is a 10 month. Matlab, the property was not in existence for the 12 months. It was there only for the 10 months. I told you that. In this case, what you should do? All the calculations should be done for the 10 months. Means the municipal value should be taken for the 10 months. The fair rent is to be taken for the 10 month. The standard rent is to be taken for the 10 month. What about the actual rent? वो तो actual rent receivable ही है ना, वो क्यों change होगा? वो तो 10 महीने का ही है. हाँ, अगर बोला होता एक्चुअल रेंट रिसीवेबल फॉर द पर एनम, तो हाँ, दैट आल्सो नीड टू बी डन फॉर द 10 मंथ्स. यहाँ तो पर एनम ऐसा कुछ बोला नहीं है. सो इट इज एक्चुअल रेंट इज फॉर द 10 मंथ्स ओनली. सो आई वोंट चेंज दैट फिगर. सो द म्युनिसिपल वैल्यू आई नीड टू कन्वर्ट इट आउट. तो कैसे कन्वर्ट करेंगे? ऑल दिस फिगर आई नीड टू बी कन्वर्ट फॉर द 10 मंथ्स. सो 180 इज फॉर द 12 मंथ्स. I need to calculate it for the 10 months. So how to do calculate? 180 divided by 12 multiply by 10. In the same fashion 168 divided by 12 multiply by 10. In the same fashion 144 divided by 12 multiply by 10. So I will get the all this figure for the part of the year. Have you clear with this? अगर यही क्वेश्चन में ऐसा होता कि it has been let out for the 10 months, property was there for the 12 months but let out for the 10 months, तो मैंने कोई भी फिगर चेंज नहीं किया होता. Have you got it? But property was not in existence. इसीलिए the municipal value fair rent and the standard rent is to be taken for the 10 months. Sorry, or the part of the year. So what would be the answers? Yes, 180 divided by 12 multiply by 10. Yeah, it comes to 150, correct. Second, it comes to 140, correct. And it comes to 120, correct. So now to apply the step 1, step 2 and step 3. First you do calculate for the part of the year and then you apply your step 1, step 2. So the step 1, whichever is higher, the answer of the step 1 would be 150 and that is to be compared with the 120, whichever is lower. So step 2 answer would be the reasonable expected rent would be the 120, that is to be compared with the actual rent of 100, correct. The gross annual value would be 120. Have you clear with it? देखो actual rent सिर्फ 100 रुपए मिला लेकिन taxable कितना हो रहा है 120. So the rent is not taxable under the HP. What is taxable? The annual value is to be calculated. Annual value is to be calculated and that is to be taxable under the HP. Have you clear with it? So the next. Next concept is treatment of the unrealized rent. What is mean by unrealized rent? Yeah, we had let out the property for the 12 months and the tenant had not paid a rent for the 3 months. So 3 months rent is to be called as an unrealized rent. Correct. The actual rent received is a 9 month, receivable is a 12 month. 12 minus 3, the 9 month is actual received. But actually under the HP what it says that actual rent receivable. जब हम step 3 में आते हैं तो what it says that actual rent receivable would be taxable. So actually देखा गया तो 12 महीने का rent taxable होगा. दो नुकसान, एक तो आई एम नॉट गेटिंग रेंट ऑफ द 3 months and second I need to pay the tax on the 3 month rent, correct. So the unrealized rent concept says that yes, the unrealized rent would be allowed as a deduction, means you need not to pay the tax on the 12 months rent, you do reduce the 3 months rent, correct. But the unrealized rent would be allowed as a deduction from the ARR, that is actual rent receivable, if you satisfy the 3 conditions. So what are the 3 conditions? First, you had been tenant has been vacated, मतलब आपने tenant को बोला कि tenant से flat खाली करवाया. The second one, the legal action has taken, we had sent a notice for the recovery of the rent. The third one, no other property of yours has been given to the tenant, correct. अगर वो बंदा रेंट नहीं पे करा तो दूसरी प्रॉपर्टी की होगी. तो सिंपली दिस 3 condition is to have a genuine unrealized rent, to check it out whether the unrealized rent is a genuine or not. If yes, you do satisfy all the 3 conditions, then unrealized rent would be reduced. But actual rent receivable अगर 10-12 महीने का है, unrealized rent is of 3, so we will reduce that, and actual rent received of 9 months would be taxable. But अगर दिया हुआ ही actual rent है 9 months का, तो उसमें से और 3 महीना माइनस करेंगे क्या? नहीं, वो रिड्यूस करने के बाद की फिगर है. So I won't be reducing the unrealized rent from the actual rent received. Have you clear with this? The treatment of the unrealized rent. The unrealized rent should be reduced from actual rent receivable.